afternoon. Happy Friday, March 15th. Mark Milam here. Let's go ahead and recap the week. Not my favorite week. We got a couple of different measures of inflation this week. Consumer price index, producer price index, both coming in a little hotter than consensus estimates. That doesn't mean that inflation's skyrocketing. It just means that the trajectory of inflation has gone from looking like a nosedive to really plateauing, and that's an important distinction to make. Unfortunately, though, this is not what the market wants to see, nor is it what the Fed wants to see. The Fed's stated goal for inflation is 2%. Now I don't want to say it's a made-up number, but it's an educated guess kind of number. There's not a lot of math behind that number. It's really a derived number that most economists agree is a healthy pace of inflation year over year is 2%. And that was a relatively easy target to hit prior to the pandemic, prior to the level of stimulus that was injected into the economy. And then one other thing you got to think about is that so many people have locked in their largest expense, housing, at historically low interest rates. So as they get employment or wage increases, they have more money to spend. That is an upward pressure on inflation. That creates problems for the Fed trying to get us down this last furlong down to 2% annual inflation. Let me flip the screen around here and we'll walk through what the week looked like. All 5 business days, we saw mortgage-backed securities sell off. That's not what we want. We want to see green on the screen. We don't want to see red. So as these mortgage-backed securities sell off, interest rates go up, and that hurts affordability. Anywhere along the lines from 1/8 to 3/8 of a point in rate worsening throughout this week. That's what we saw. Down here at the bottom, when you start looking at some of the numbers around the PPI right here, producer price index, coming in hotter than expected. If we go back to Tuesday, this is the CPI, consumer price index, really right around expectations, maybe a touch hotter than expected. Nothing crazy here, but this is really the issue. What we're looking at here is the 6-month change in CPI, and we were declining smartly, and then we got to December here of 2022, and then since then, all throughout 2023, we've really just kind of been hovering in this 3 to 3.5% range for CPI, Consumer Price Index. What's fascinating about this is if you strip out shelter costs, which is rents, if you strip out rents, here's where we are, 1.8%. And this is kind of the monkey in the wrench, or the fly in the ointment for a lot of us who track this kind of data, is that shelter, as it's reported for inflation, is really talking about rents. And it's really largely comprised of 2 different surveys. These are literally phone calls that are placed to tens of thousands of Americans that ask them a couple of questions. Number one, if you're renting, what are you paying in rent? Which those leases could be 11, 12 months old. So that rent data could be very, very stale. It's not very active data. And then the one that's really troubling, and the one that's the most heavily weighted, oddly, is owner's equivalent rent, which is where you call a homeowner and you ask them what they think their home would rent for, which is not exactly the most scientific or data-based way to aggregate inflation data for housing. And housing is the biggest piece of the pie in the inflation basket. So it's an important point to note that while we didn't get the inflation news we wanted this week, and while interest rates are suffering for it, is there really a concern here? Because if you stripped out shelter, you're talking about inflation sub 2%, and that's below the Fed's target range. Unfortunately, we'll have to endure and hope for a little bit better news as we continue to progress throughout spring. In the meantime, we can take a March Fed rate cut off the table. The Fed is not going to cut the Fed funds rate next Wednesday. That's their next scheduled meeting on March the 20th. We could probably take one off the table for May as well, looking at roughly a 50% chance of a Fed funds rate cut as we move out into June, halfway through 2024. If I can be of any service to you over the weekend, don't hesitate to reach out, mark.milam@highlandmtg.com. Have a good weekend.